Hey guys, Tony here. Welcome back. This week I'm going to be doing some initial coverage for you on what I call the Tier 2 EV companies. Tier 1 being companies like Tesla or any major brand auto manufacturer. Tier 2 being some of the newer startups of the last couple of years that have decent production volume going, but maybe not yet quite profitable. Tier 3, that is a whole nother category of companies that are not profitable, maybe have no revenue, and are still in development phase. Back in 2021, in many of the live streams, we talked about many of these different EV companies as they IPO'd. And if you guys recall, I told you I probably would not be investing in any of them in the beginning because they are just so damn expensive to start up and they're going to be losing money for many years and many of them won't be around. We've already seen some go. We have some that are on the way out. This week, we're going to be focusing on the Tier 2 that are still here and can they make it? And we're going to kick it off by talking about Rivian. For those of you that are not familiar with all of the details of Rivian, my goal here is to give you a high-level overview of the company and its products, production, and the finances. And then as the company posts quarterly results, we will do occasional updates. Rivian is producing and delivering 3 primary products right now. The first one being the R1T pickup truck with an MSRP of $73,000 to $92,000. Rivian's second vehicle, and quickly becoming its most popular, is an SUV with the name R1S. And the R1S has a MSRP of $78,000 to $93,000. The third vehicle that Rivian produces is the EDV. In your city, you may have seen some of these already operated by Amazon, who currently has an exclusive contract with Rivian to deliver these vans. Amazon has about 5,000 EDVs in operation right now with orders for another 10,000 over this year. Rivian is currently doing its manufacturing in a 4 million square foot facility in Normal, Illinois, in what used to be a Mitsubishi plant that they bought back in 2017 for $16.5 million. And since then, Rivian has expanded and modernized the plant. And before we get into the financials and start talking about the challenges that Rivian is facing, I thought it might be interesting for you guys to see the size and the scope of this factory, the amount of robots and automation. Rivian invested well over $1.2 billion renovating and modernizing this factory and currently has about 7,000 employees working there. As you're watching, you'll notice multiple lines both for the R1T and R1S products, as well as a manufacturing line for the EDV delivery vans. In just a few weeks, we're going to get the Q3 financial results, but what we know based on preliminary information that Rivian has recently released is that in Q3 in this factory, they produced 16,304 vehicles. That is a 16.5% increase over the previous quarter, and compared to Q3 a year ago, it is more than double the amount of vehicles that they produced. The manufacturing capacity of the plant in Illinois is 150,000 vehicles. This year in 2023, their target is to produce 52,000 vehicles. Rivian has also announced their intent to build a second manufacturing location just east of Atlanta, Georgia. That facility is slated to come online in 2026, and the investment in that facility could be up to $5 billion. The planned capacity of the Georgia plant is up to 400,000 vehicles. As I watch this video, it really is impressive to me the amount of robotics and modernization in this process. I know that Rivian initially had an investment from Ford, and if you've seen any of the Ford production processes, this might look a little bit familiar. I honestly don't know how much input Ford gave them in designing and building their factory, but it looks very similar. And when you're comparing to maybe some Tier 3 EV companies, ones that are not in production yet, I want you to keep pictures like this, videos like this in mind about what it takes to build a real factory for real production, not just in terms of equipment and robotics, but the cost and the complexity. As you're evaluating your EV investments, whichever company you're in, this is the type of model that you should be thinking about. Do they have this? Are they planning on doing something like this? Do they have the budget for this? And if they don't have that money, I want you to be thinking about, where are they going to get it? Are they going to take on billions of dollars of debt, or are they going to do equity raises and dilution? As we get ready in just a minute to briefly look at some of the financials for Rivian and wrap up this video, I want you to keep in mind that Rivian's IPO in 2021 raised $12 billion. At the end of 2021, Rivian was sitting on $18 billion in cash and cash equivalents. In just 2 years, they have burned through almost half of that, currently sitting at just over $10 billion in cash and cash equivalents. A couple quarters ago, Rivian also issued $1.5 billion in convertible debt. And just here recently, in the last week or so, they announced another $1.5 billion in convertible debt to help kickstart this new factory that they're planning in Georgia. As I said back in 2021, it is expensive to start up a car company. I want to level set any critics that watch this video. Just because I am covering Rivian at this time does not mean that I'm recommending it. We are initiating coverage and will provide ongoing coverage. I will let you know if and when I decide to buy some Rivian. The IPO for Rivian in late 2021, as I mentioned earlier, raised $12 billion for the company. The stock quickly ran up to $179, as you can see on the chart here. But me knowing how costly it is to start up an auto manufacturing company and expecting that Rivian would be incurring losses for many, many years, I did not participate in that IPO, and I do not currently hold any Rivian stock. It has traded down now as low as $11 and change, currently trading at $19.88. For those that don't want to sit through a boring deep dive on 10Q financial statements, balance sheets, etc., don't worry, I got you covered here with my green, yellow, red dashboard. A couple of high-level things to give you a picture of the risk of this company. Ideally, we'd like to see everything green on here, but I did color some things red and some things yellow. Let's touch on those real quick. Rivian has red for profitability. They are not profitable. They have a negative return on equity, and they have a high short interest over 16%, meaning that there is some negative sentiment on the street towards this company. It is being shorted. When you see high short interest, that should pique your curiosity to go dig deeper into the financials and understand what is wrong with the financial health of this company that it is being shorted. Things that I have yellow. Let's start off with the EPS, earnings per share momentum. I have it yellow because it is negative, but it is improving. We'll touch on that in just a second. Dilution risk. Is the company going to dilute? Well, as I mentioned a few minutes ago, they did issue $1.5 billion of convertible bonds a couple of quarters ago, and they just announced another $1.5 billion of convertible bonds. That is debt that could potentially in the future be converted into shares. So shareholder dilution potential right there. Rivian does not currently pay a dividend. I don't really worry about that yellow box right there on a young company like this. And as I looked through all of the insider trades, I did see some unusual activity, some unusual selling from the chief accounting officer and the CFO. Nothing so bad that I would put the box in red, but it is worth mentioning. It does not mean that you must sell every time insiders sell, but it is something that you should investigate, understand, and then make your own decision. As we wrap up this video, we're going to take a very high-level look at the financial statements of Rivian, but I'm also going to be tracking their production and delivery numbers, because at the end of the day, it is production and delivery that decides when Rivian gets profitable, and that's really when you want to be in this company, once they are profitable. If you are holding Rivian for years, waiting for them to get profitable, it is going to be very uncertain what is going to happen with the stock price. As we look just 2 years ago in Q4 2021, they had just over 1,000 units, and they have steadily ramped up their production with a recently announced production of 16,304 units for Q3. Deliveries to customers just over 15,000. Now we will get the full details on Q3, the 10Q and the earnings call in just a couple weeks, and I will be providing some coverage for that here on the channel. On the income statement for Rivian, there are some good things and a lot of things to be concerned about if you are holding Rivian. Just being upfront and matter of fact with you, revenue is growing, right? That is what we want to see. Increasing top line revenue. Gross profit is negative, but they are starting to turn the corner, and maybe we'll have to see in a couple quarters if they can get gross profit to a positive number. Operating income is all negative. Net income, all negative. And as you would expect, then you have negative earnings per share. Moving over to the balance sheet, cash and cash equivalents. You can see there that high bar, $18 billion when they did their IPO. They have burned through over 8 billion of that, sitting now at 10 billion in cash and cash equivalents. Working capital wise, Rivian is currently in good shape with over 12.8 billion in total current assets versus only 2.2 billion in total current liabilities. Long-term debt on the most recent 10Q, the one ending in June of 2023, was just over $3 billion. On the cash flow statement, just reiterating what we've already said, this company is burning cash. You can see they have negative net cash flow and negative free cash flow. Here a couple of quarters ago, March 2023, you can see 1.4 billion raised from the convertible debt. And in an upcoming quarter, you'll see another 1.4, 1.5 billion from the convertible debt that they just announced that they're going to sell to help fund the Georgia plant that they plan to get up into production by 2026. It was that announcement of the new issuance of convertible debt back on October 6th that caused Rivian to drop from the $23 to $24 range all the way down to $17 in a couple of days, and it is currently recovering over the past week. Rivian's Q3 earnings date is November 7th, so just around the corner here in a couple of weeks. They did about a week or so ago release some preliminary information on production and delivery numbers, telling us that they delivered 15,564 vehicles for Q3, and that beat the expectations. What we are going to have to watch with Rivian is their continued progress towards cost cutting, efficiencies as they scale up the production, and we're going to need to see the management sentiment for next quarter and 2024. The biggest problem that Rivian has is their cash burn as they ramp up production. Just in Q3, this one that we're expecting to get results on in a couple weeks, they are expected to burn $1.4 billion in cash. Although it is expected, that is not a trivial amount. And if you are invested in this company, you should be anticipating future additional needs to raise cash. The great things that Rivian has going for it is the backing of Amazon, all of those orders for the EDV cargo vans, and a solid ramp of the manufacturing in the Illinois plant, with a second plant planned to come online in Georgia in 2026. When they can really hit massive production numbers, then you can possibly expect that the company can start turning some profits. It does take several years, sometimes many years, for auto manufacturing companies to get profitable after a startup. As a retail investor considering an investment in a money-losing company like Rivian, then it is up to you to read through the 10 Qs, understand the income statement, the balance sheet, the cash burn of the company, and the cash needs of the company. This is a very long process. I can't promise you that right now is the lowest that Rivian is going to be, considering that they might need to raise additional cash. We're going to have to weigh that against how their numbers increase on production. We also have to keep in mind that Rivian is a very expensive product, and competitors like Tesla are trying to reduce prices to target their competition. Analysts covering Rivian have a range of price targets between $15 for the low, $44 for the high, and an average price target of $27, meaning that for the short term, potentially, Rivian could be a buy at $19. That is up for you to decide. Do your own due diligence. Let me know your thoughts down in the comments. Thank you for watching. I am Tony Denaro, and I will see ya on the next video.